What if I told you there's a stock market signal so rare it has appeared less than 20 times in the last 80 years? And what if that same signal was so powerful that historically it has a perfect track record of predicting positive market returns a year later? This isn't a hypothetical. The signal is called the Zweig breadth thrust, and it has just appeared 2 months ago, suggesting a massive shift in market momentum is underway. This isn't just any other indicator. For those who know what to look for, it's the investor's dream signal. And what it's telling us right now could define your portfolio's performance for the next 12 months or more. Let's be honest, the market right now is anything but clear. We're caught in this relentless tug of war between optimism and fear. One day the headlines are screaming about a resilient economy and strong earnings. The next they're warning about geopolitical turmoil, stubborn inflation, and the threat of a slowdown. This constant flood of conflicting information creates a fog of uncertainty, and it makes finding your footing incredibly difficult, even for seasoned pros. Every rally is met with doubt. Every dip feels like it could be the big one. We're drowning in noise. Pundits on one channel offer contradictory advice. Algorithms trade on whispers, and the news cycle seems to thrive on the chaos. In this kind of environment, finding a clear, reliable signal feels almost impossible. So how do you know if you're in a genuine market turn or just a deceptive bear market rally? How can you commit your capital with any confidence when the ground beneath you feels like it's constantly shifting? This is the core problem every investor is facing, the desperate need for a signpost, something rooted in data, not opinion, that can cut through the noise. It's in these moments of peak confusion that time-tested indicators are the most valuable. If there's one news flash to trade on, it's this one. Newsflash, this time is not different. To find a signal with this power, we turn to a titan of Wall Street, the late Dr. Marty Zweig. Zweig wasn't just any other analyst. He was a meticulous, data-obsessed investor who became famous for his deep understanding of how markets really work, and perhaps most famously for calling the Black Monday crash of 1987. He was a former finance professor whose entire career was built on two powerful principles. First, don't fight the Fed. We all hear it and often repeat it, but Zweig coined it. And second, and just as importantly, don't fight the market's underlying momentum. Zweig spent his life studying market history, searching for the patterns that separated weak, fleeting rallies from the start of powerful, long-lasting bull markets. He believed the biggest moves began with an explosive, undeniable shift in the market's internal energy. And from all that research, he developed the Zweig breadth thrust. He didn't design it to be some day trading gadget. He meant for it to be a dream signal, an exceptionally rare event that tells you something profound is changing beneath the surface. Its rarity is its strength. In fact, there was a 25-year stretch from the mid-'80s to the late 2000s where this signal never appeared at all, and many people can go their entire careers without seeing it more than a handful of times. And that means, look, we can't exist only trading off the Zweig breadth thrust, but we do want to sit up and pay attention when it occurs, like it has recently. Right? So that's what makes the recent appearance such a momentous occasion. It's the market's version of a lightning strike, a sudden, brilliant flash that lights up the entire landscape. It signals that the storm of selling has likely passed and a new powerful trend is just beginning. These signals are so powerful that even though the most recent is about 2 months old, the rally likely has much further to go. So what exactly is this legendary signal and how does it work? At its heart, the Zweig breadth thrust measures the speed and force of a shift in market momentum. It doesn't really care about the price of an index like the S&P 500. It cares about market breadth. Think of it like this: a truly healthy bull market isn't just Nvidia and a few tech stocks dragging the averages higher. It's a broad based rally where almost everything is participating. It's the entire army advancing together, not just a few generals. Market breadth is simply how we measure that participation by looking at the number of stocks going up and subtracting off the number going down. The Zweig breadth thrust takes this idea of breadth and adds a layer of rocket science. It uses a 10-day moving average of the ratio of advancing stocks to all stocks. This gives us a smooth number that shows the underlying trend of participation. Now, here's the key. This is the specific condition that triggers the thrust. A ZBT signal happens only when that 10-day moving average goes from a deeply pessimistic oversold level of 40% or below all the way up to a powerfully optimistic overbought level above 61.5%. And it has to make that move in just 10 trading days or fewer. So let's break down why that is so powerful. A reading below 40% means the market is completely washed out. Pessimism is everywhere. Sellers are exhausted, and fear is the dominant emotion. On the flip side, a reading above 61.5% signals broad aggressive buying across the board. For the market to go from one extreme to the other in just 10 days, that's the thrust. It's like a rocket ship trying to escape the Earth's gravity. It takes an incredible sudden burst of energy to break free from the downtrend. This isn't some slow, gradual recovery. It's a violent, decisive reversal. It tells you that the sellers have finally given up and the stampede of buyers has stormed in, completely overwhelming the sellers. This rapid change in psychology from deep despair to widespread excitement is what historically has marked the starting line for major bull markets. The reason the financial world should stop and pay attention when a Zweig breadth thrust happens is its astonishing track record. This isn't just a theory, it's backed up by nearly 80 years of market history. Since 1945, the signal has been triggered only about 18 times. That's how rare it is. But it's what happens after those signals which really gives it a legendary status. According to my analysis, after every single ZBT since World War II, the S&P 500 was higher 6 months and 12 months later. That's an 100% success rate, and the returns weren't small either. Historically, the average gain in the 12 months following a Zweig breadth thrust has been around 23 to 25%. Think about that. This indicator has successfully navigated the periods after recessions, geopolitical crises, and high inflation. It flashed in August 1982, right at the dawn of one of the greatest bull markets in the 20th century. It appeared in March 2009, perfectly marking the bottom of the great financial crises. These aren't just random blips on a chart. They were major turning points. As Zweig himself wrote, the most major bull markets begin with a thrust of this kind. The signal that triggered in April 2025 adds yet another chapter to this history. It has sparked incredible optimism among market watchers, suggesting that the recent period of volatility and fear may have ended in a classic all sellers are gone moment, setting the stage for a sustained move higher. Of course, no indicator can ever be a guarantee, but the historic precedent set by the Zweig breadth thrust is arguably one of the most compelling bullish signals you can find. So that brings us to right now. The Zweig breadth thrust signal that triggered in April 2025 didn't happen in a vacuum. It came right after a period of serious market anxiety driven by all those concerns over global trade and the economy's direction. This is exactly the kind of environment the ZBT was built to analyze. The signal suggests that the intense selling pressure has finally been met and crushed by a surge of broad-based buying, a signal of institutional money moving in and a powerful shift in sentiment. What does that mean for us as investors? Based purely on the history, the ZBT suggests a very high probability of positive returns over the next 6 to 12 months. That average 12-month forward return of over 23% is a powerful statistic you just can't ignore. This isn't just about a temporary bounce. The ZBT implies the potential start of a durable, long-lasting advance. At the same time, we've already seen a strong rally off of April lows, and the initial stage of the advance may be close to exhausting. That may make now a poor time to add for the additional upside the ZBT suggests we should expect. Meanwhile, larger corrective pullbacks should offer good opportunities in this environment. For Thinkorswim users, if you also want to be aware of future ZBT signals, you can grab my free indicator, check the description below, for a TOS share link. So the appearance of the Zweig breadth thrust is a rare and significant event. It gives us a powerful data-driven reason for optimism that cuts through a lot of the day-to-day noise. We've talked about the legend who created Dr. Marty Zweig. We've broken down how it works, and we've looked at its incredible historic track record. But now I want to hear from you. What are your thoughts on this historic signal? Do you think its track record will hold up this time? Or are there other factors you believe are more important right now? Drop a comment below and let's get a conversation started. And if you want to stay ahead of the curve with more deep dives into the signals that actually matter, make sure you subscribe and turn on notifications. You won't want to miss what's next. The Zweig breadth thrust is more than just a line on a chart. It's a reflection of a profound psychological shift in the market from widespread fear to broad-based confidence. While we always have to be smart and look at the big picture, the message from this dream signal is clear and compelling. History suggests that when this kind of buying pressure shows up, it pays to listen.